Hello everyone, this is Marshall Gittler, Head of Investment Research here at FXPRIMUS, bringing you the day's schedule events for Wednesday, March 23rd. Well, we've got an ECB member and an FOMC member speaking this morning. Bundesbank President Jens Weidmann will speak in Liechtenstein. He's criticized the ECB's decision to cut the refi rate to zero and to expand the quantitative easing bond buying program, and also claimed there's no risk of deflation. Of course, his views are both well known and clearly not in the majority on the ECB board, which voted overwhelmingly in favor of the measures. Moreover, his comments have been contradicted recently by other ECB board members. In short, Weidmann is likely to huff and puff, but his views are well known, and I doubt if he'll be able to blow the ECB's house down. St. Louis Fed President James Bullard is also speaking. In a rather technical speech earlier this week, he argued that the FOMC has met its goals and that, quote, prudent policy suggests edging the policy rate toward more normal levels, unquote. He's likely to expand on these ideas today. But here, too, since his ideas are already well known, they may not have that much impact on the dollar, although we should be careful for some volatility around the time. U.S. new home sales for February are coming out at 1,400 GMT. They're expected to rise, a bit of good news in an otherwise mediocre housing market that's being held back by high prices and a shortage of houses to sell. A rise in new home sales could prove positive for the dollar. Crude oil inventories, which will be released at 14:30 GMT, are expected to rise yet again, although the rise is forecast to be greater than the previous week's unusually low increase. It's forecast to be less than the average over the last 3 months, which is 3.2 million barrels a week. This could be taken as good news for the oil market and prove positive for oil prices and commodity-related currencies, especially the Canadian dollar. Finally, the New Zealand trade data for February of this evening at 21:45 GMT is expected to show that the trade surplus rose as exports are forecast to grow faster than imports. However, this seems to me to be only a temporary respite. Looking at the trend over the last 12 months to smooth the volatile month-to-month data, imports are growing much faster than exports. Now, if China's growth doesn't pick up, personally, I doubt if the New Zealand trade surplus will continue to rise. But meanwhile, today's data could be positive for the Kiwi. This is Marshall Gittler, Head of Investment Research at FXPRIMUS. Get more market insights on our education pages and turn your trading ideas into action with FXPRIMUS, the safest place to trade.